All right. Well, yeah, so you guys know no trading for me today whatsoever. I agree, knowledge is king, man. I wish more people when they see educational session would show up. I wish more people would show up. Even on John's sessions too. I wish more people would show up, man, because they're not learning the very important stuff. Yes, they're learning the great, they're learning how to live trade, I guess, or how to trade, I should say, on the live sessions. But this is the important stuff right here. Going over education, John Sessions doing psychology, risk management. That's the important stuff, and I'm glad you guys are here because you understand that. You get that. Just like Krupp said, knowledge is king. It's power. Knowledge is power, right? But it's also what do you do with that knowledge? And that's what we do in the live trading sessions. Once you have that knowledge, what do you do with it? You apply it. You start using it. And that's what live trading is for, and that's why live trade in front of you is one, so you can make money, but two, so you can learn how to actually trade with the knowledge I'm giving you. So today, in the session, we can do a little bit of, you guys ask me what you'd like to learn. I can go over a specific concept. We could cover one specific concept during the lesson and go in depth, or you guys let me know if there's anything specific you might be struggling with. Throw it out there and let me know what you guys want to learn. Let me know what you guys want to learn. And we will cover it. We will go over it. I will teach it. We will talk about it. So you guys throw out what you guys are trying to learn today. If you have questions maybe about the charts, about any of the moves that have happened today, we can talk about it. Can you break down Turtle Soup play that was presented today? Yeah. Oh, for sure. Boom. Yeah, we can talk about it. So I'm assuming, okay, you're talking about this little play right here, right? Where we came down and we swept that internal liquidity here and we started to pump. So we had that little move there. We can even break it down on the 1 minute time frame, but let's look at it on the 5 minute first. Because yes, we do have a little turtle soup. I'm going to get rid of all of my annotations on the charts right now. We're going to start clean. So yeah, here's the deal with turtle soup, right? What do you want to see in turtle soup? You want to see internal liquidity swept targeting external liquidity. So technically, if we go to external liquidity on like the 1 hour, remember, we don't have external until this high right here. So that is our external liquidity level right here. Boom. Right? So when we see the internal sweep, like on the 5 minute, where we came down right here and we souped right here, these lows, right? That's going to be our soup. We want to see it eventually go up and take out our external high, right? That would complete the turtle soup. That's what we're looking for. When we don't actually go take out that external liquidity level, it's technically not really a turtle soup. I mean, yes, it's we still souped the lows, but I see this more as AMD, power of 3 here. I would focus more on power of 3 because you can see we haven't really gone up for the hourly high. We saw a lot of pullback. I would consider this more of a power of 3, right? We got this accumulation right here, all that accumulation, right? And then we came down and we manipulated right here. So that's step number 2. What's step number 3? Distribution. AMD. Accumulation, manipulation, distribution. So we came down, we swept, we got our manipulation, and then we distributed. What is the third or the fourth step of power of 3 that a lot of people don't talk about is optimal trade entry. Optimal trade entry is the fourth step. So we want to look at the swing high that formed on this distribution leg right here, down to the swing low. And what we want price to do is retrace down into the golden zone. Do you guys see the golden zone, 0.62 to 0.79? Everything right here, this is the golden zone. Golden zone. That's where we want to see price retrace to. Now, it's okay if we retrace into the discount of this range because that can still work. But on that power of 3 move, I really want to see us come into this level right here. Notice how close we got to trading into the golden zone, into the optimal trade entry level, right? So this is our OTE right here, OTE. I really would want to see us trade down into that level and then start pumping. And notice how we left behind all these equal highs up here. That means now we have a bunch of buy side liquidity resting, waiting to be taken again. So when we do come down into the golden zone or into the discount, right, we can also type that right here, discount, because this is the discount right here under the 0.5. We would want to see us bounce off of this level and then continue up to grab, what do we have up here? Equal highs. Look at that. Equal highs up here. We got a bunch of relative to equal highs up there. So yes, it is a soup technically. It is a soup right here where we soup these lows. And what does that mean? We create internal lows on a smaller time frame, like the 1 minute, the 5 minute, the 15 minute. We come down, we grab those lows, and then what happens is we reverse, we distribute, and we displace the previous highs. We wait for that. If you didn't get the initial move right here, right? You wait for the pullback into the discount or into the golden zone, and then you look for your entry off that to target the longs again, where we would want to see something like this. Boom, 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 right? Something along those lines, where we're coming up here and we're finally playing out and taking out equal highs. Now, if it was going to be a full turtle soup, I would want to see this one completely go and take out that hourly high. I wouldn't even want to see this one pull back. On a turtle soup, I don't even want to see this one pull back. I want to see this one go straight for the hourly high, right? So after we soup those lows, I want to see this one go straight there. I don't even want to see a stop right here. Now, again, remember, we do have the election today, right? So price action's a little bit more hectic, a little more choppy here right now. So we didn't really see that full follow through. But when it comes to turtle soup, you want to see the internal sweep, and then you want to see external buy side taken or internal buy side taken and external sell side. So hopefully that makes sense. If it doesn't, please ask me more questions. So this one to me looks more like a power of 3 in AMD here that is going to eventually play out and come back to take out equal highs. That's what it looks like to me right now. Just looking at the 5 minute, right? I haven't really taken a look at the other time frames. It looks like that on the 15 minute as well right now. If we look at the hourly time frame, we are getting a nice bounce off an hourly bullish order block here, right? So it still does look pretty bullish to me right now. And just looking at the smaller time frame, like the 5 minute, to me, the 5 minute still looks very bullish. We haven't come down and really gotten a market structure shift or anything. We traded back into a discount of this range, and it looks like we're coming back up to grab equal highs. What do I think, Trump or Harris? Dude, I don't even know, man. I do not know. Honestly, it could go either way. Like, it could really go either way. I don't know who's going to win. It seems like the battle is very close right now. So I think we're just going to have to wait and see. I don't know, man. I think it's going to be a close call. Brian, you said I am in sells from a 2 minute resistance level entry at 23.33. I want to aim for 22.31. What are my thoughts? Okay, so let's go up to the 2 minute. You are in off of 23.33. No, MB, I will not take any trades today. No trades for me today. 23.33. Where is this resistance level that you targeted? I'm assuming, okay, was it this order block right here? 2 minute order block, I'm assuming is where you got your entry. Oh, wait, 333. Okay, so up here. Okay, I see. So did you get your entry off of this 2 minute order block up here? One of these 2 minute order blocks. Looks like you got your entry off of 20. Okay, so right now, I don't like that too much. Yes, originally that looks like it is a good trade because we traded down into a discount here. Personally, if I was in this position and I got my entry at 22 or at 333 here, I mean, look, you caught how many ticks? You caught 185 ticks, and I'm hoping you sold for some profit, right? Did you sell for some profit there? Because this one looks like it is for sure going to come back up and take out those equal highs, right? Based on that power of 3 model. That's okay, all right? Okay, I would have my stop loss at break even if I were you, or I would just get out. That's what I would do because, look, you were in 185 ticks of profit. You don't want that to come back and end in a losing trade. That's always the worst. So yeah, and here's this is a learning process, right? Because why should you have taken profit? Well, you can see that if you looked at the 5 minute, right, and you know that our bias right now is still bullish because all of our time frames are still telling us bullish right now, and you can notice that we traded back into the discount of this range, right? Off of a power of 3 move, you probably would have been able to see that a little bit better, and then you would have known once we hit into the discount of this range, that's when you would have looked to take some profit, right? And that still would have been 120 ticks of profit right there. Even if you waited to take profit down here, that's still 180 plus ticks of profit. So again, that's just a learning process that you will see if you go back and kind of look at the 5 minute time frame or the 15 minute time frame, and you can kind of see, well, that is a strong level that we can very easily bounce from because of the power of 3 move that we saw, right? So again, that's just a learning, and you see that now. You didn't take profit. Oh well. Move on to the next trade. Move on. It doesn't matter. It's in the past now. You learn from it, and you just gotta, kind of see the bigger picture a little bit, right? But again, that was a good entry, and we did expect those shorts to come down and trade back into the discount of that range. So overall, I think it's a solid trade, right? If we look at the 1 minute or the 2 minute, we got a nice break of structure. Looks like you had a nice entry off a nice resistance level. We had a 1 minute fair value gap there as well. I would say you had a really nice entry. We had a lot of sell side liquidity down here. But in the future, now you're gonna want to look at the 5 minute, the 15 minute, and you're gonna want to see, okay, if we have this dealing range right here with the power of 3, I don't know if we're gonna go much further than the discount. And even if we do, at least take some profit, right? At least take profit. Like even if this one does come all the way back down right now, you still want to secure profit, right? And I see that you said you didn't realize you're up that much. That's okay. That's fine. But when you're going to get into a trade, you want to make sure you have those levels already thought out of where you're going to take TP before you take that trade, right? Because if you don't have those levels already figured out, then you're going to be confused once you get into the trade. You're going to be like, where do I take TP? And that's why I think it's so important before you get into the trade, you have to have an understanding of why you're taking the trade and where this trade is likely to go, right? And that just all comes with learning. So you got a good entry, you took a good trade, and now the only thing you need to work on is, okay, where am I going to take my profit? Is this a strong support level down here? Have we retraced back into the discount of the range? That kind of thing. What are you using to calculate your ticks on TradingView? This tool right here, this is the trade tool. So if you go over, which one is it? To the left, I think it's on the fourth one down. So 1, 2, 3, 4, fifth one down, long position, short position. That's how I look at my positions with my stop loss and with my TP levels, because then it just shows us exactly how many ticks and how many points the move is going. What you can also do is you can hold on to shift. Let's say you went from here, you hold on shift, you click on the left of the mouse, and then you drag this down, and then this will show you as well how many points and ticks it went. Right there, 46.75 points, 187 ticks, right? So you can also do that. But those are two ways to do that. Okay, I'm going to look back up. You averaged up your 0.618 to 0.62 on the fib. Yeah, 0.62. Yeah, I mean, some people use different levels. I like the 0.62, 0.69. That's what I've learned, and that's what I've always used, and it works for me. And from my backtesting and my usage of that strategy, the 0.62 is the level that I use. That hourly swing high is also a rebalanced 4-hour SIBI, which would be considered an intermediate term high, true, which would be considered protected until the higher time frame draw on liquidity is met. So if we already met the draw, we can see it take it out. But if not, we're still bearish. It'll stay protected and go lower without sweeping it. That's a great point, right? And that is more advanced right there, a more advanced thought process, right? So let's kind of go over what you're saying. So let's look at the hourly. So you're saying the hourly swing high also rebalanced the 4-hour SIBI. Okay, so are you talking about, let's see, let's go to the 4-hour time frame. The 4-hour SIBI rebalanced it. Yes. So you're talking about this move right here where we closed above and disrespected this level. Is that where you're saying this 4-hour SIBI right here? Or are you talking about the previous swing high over here on the hourly? Because I'm looking for our bearish imbalances on the 4-hour here. All right. So we did rebalance. We rebalanced this entire 4-hour right here, right? We closed above, so we technically disrespected it, right? So then you're saying okay, it's a very small 4-hour. So you're talking about this one. Okay, so you are talking about that one. Okay. So this one right here, you're right. There is a very small 4-hour SIBI up here. A little bit of an imbalance on the 4-hour. So yes, it rebalanced that level. Whoa. What are you doing? So yes, you are correct, right? Very small imbalance right there. We rebalanced it. We go to the 1 hour. Okay, so now we have that high, which you're right, intermediate term high. So we wouldn't need to go further. We wouldn't technically need to come back up and sweep that liquidity if we are bearish on the higher time frame. I agree. So if we already met the draw, we can take it out. But if not, and we're still bearish, I'll say protect and go lower without sweeping. Yeah, so I completely agree, right? I completely agree. We don't have to come up and take that since we did rebalance the 4 hour. Yeah, no, I agree with you. I agree with you, Krups. 100%. We do not technically have to come up and take that level. And that is one reason why we do see a little bit of a struggle to come back up there, right? Especially because we just rebalanced an entire 1 hour bearish imbalance right here. We came up to the top. We didn't disrespect it, but we did rebalance that entire level as well. And we already created a swing high on the hourly here. So when we create a swing high on the hourly like this, you are correct, right? Where whenever we create a swing high and we come up and rebalance and sweep liquidity, like these highs right here, we typically do want to see some good retracement back in the market to come back down and rebalance, some of our bullish imbalances as well. So I completely agree with that, right? So what would we need to see though? Like let's say you were looking for those shorts to step back in, you would want to see some kind of displacement move, right? Some kind of break of structure back to sell side, right? Where we're actually closing below a previous swing low on a 5 minute or a 15 minute, right? So when we create a swing low like this one on the 5 minute, it's not the best swing low. It's not super clear, but you can see it right here. Once you come down into that level and we start pushing through the golden zone, that's when you're really expecting price to come back down and rebalance. As long as we're respecting, though, the discount of this range right now, again, my intermediate term bias, my short-term bias right now would still be bullish because we left behind some equal highs right here. We've traded back down into a discount of this range. And until we get a true market structure shift back to sell side, my bias right now, short-term, would still be long. I would still have a long bias right now, right? Until I start seeing that real market structure shift on the higher time frames, right? Just because, again, we left behind all of these equal highs up here. So there still could be a good possibility that we come up. But if we do fail, let's say we fail to come back up and we get a nice market structure shift here on the 5 minute, that's when we're really starting to look for shorts to come back down and rebalance the entire day, right? The market for the whole day. So I agree with you there. You said, but I do believe it can push back up and take out our high of day today, and maybe have some. Yes, exactly, right? High of day with those equal highs. I don't like how these shorts look either, which held me out of taking any shorts. Yeah, I don't like how the market looks right now in general. Again, as I said before, the market was great on our first initial move where we had that initial push up for buy side liquidity. I really liked that initial move, right? It was great. I didn't trade it because I was staying out of the market today. But you can see it was a really good move. Ever since then, even though we have had a push higher and we did have a little power of 3 here, I'd say this move was decent. You could have caught this move this long, right? Besides that, we've had a lot of chop, a lot of chop, a lot of chop. So I wouldn't say we've had, amazing price action, but it's actually been pretty decent here. It's been pretty decent. So right now it looks like price is trying to move lower. We're back into the discount where we just tapped into again. So this is when you want to start seeing if we're getting strong displacement moves with good fair value gaps, right? And good order flow. Because right now on the 1 minute, the order flow is not too good. It's very choppy, right? Very sideways order flow here. You want to see downward order flow or upward order flow with good strong candles with good fair value gaps being created. That price is going to trade back into, rebalance, and then react off of, right? So, yeah, thank you for bringing up that point. That is very important, right? Looking at our previous swing highs and previous imbalanced levels to see if they have already been balanced and if there's a reason why price would want to move higher or not, right? So completely agree. You guys have any questions for me? Any comments? Usually you would hope that the election winner would be announced late at night, like early morning tomorrow. Like 3 a.m., 4 a.m. around that time, I would hope. But sometimes, like our last election took a lot longer. It took a few days for them to finally announce the winner. So I don't know exactly how long it's going to take, but usually it should be the night after or, that early morning after. But they'll start having a really good idea of who's winning what states throughout the whole day. Yeah, exactly. Preliminary leads should be known by 10 p.m. Yeah. So we should have a pretty decent understanding by tonight. Again, tomorrow might be very crazy price action, It might be crazier than it was today because today wasn't even that bad. Today actually wasn't too bad. Tomorrow might be worse, right? Once we actually find out the winner, if we do find out the winner, it might be worse tomorrow. I want to see our want to see a soup, the candle that rebalanced the 1 hour busy, which would create a 4 hour busy below to take us higher. That would be nice. That would be nice, right? Creating that 4 hour down here. Right down here. Can you go over on a trade that you would scale into full size and target to scale out just for practice? Yeah, for sure. Let's just talk about. Let's find a good. Let's just talk about. I'm gonna delete all this. Let's talk about this trade right here, right? Let's just talk about this little power of 3 move right here. Let's go down to the 1 minute time frame and let's see if we could find a good entry level that we could have taken on the 1 minute. All right, so accumulation, right? We have all this consolidation right here. We're not trading this. We're waiting for the fake out. Okay, we fake out down here. Let's just do everything based on the 1 minute right now. Right, we have this nice 1 minute imbalance below that we tap into after grabbing a bunch of sell side liquidity right here, right? So we grab our sell side, we sweep, and then what happens is we form a nice little reversal pattern here. Low, high, lower, low displacement of the highs. So this is actually a bullish breaker right here. And then what do? We form a nice 1 minute bullish fair value gap. So let's say we targeted our long entry. We waited for this fair value gap to be created. Let's say we targeted our long entry right here. Okay, let's say we got our entry at the very top. We kept our stop loss below. Let's say just below here, about 60 ticks. Right, and what are we targeting? First of all, we're targeting the high of this accumulation range right here. That's our first target for liquidity. That's our first target right there. So let's just say that's our first TP. That's a pretty good first TP, right? We'd be targeting about 156 ticks off this fair value gap. Our risk to reward would be pretty good. It's almost a 3-to-1 risk to reward on that one, or 1-to-3, right? So not too bad. Let's say you get your first entry right here off this wick. Where could you possibly add into your position on this kind of trade? This is a tough one to be able to add back in. Let's say you got your initial entry off of this wick right here, this candle. Okay, price comes back up, it comes back down. You probably don't want to get this entry right here. You don't want to get this bounce entry. I wouldn't add back in here just yet, because if we look at this 1 minute SIBI right above, notice how we got a very strong bounce off that level. I think I would wait for us to close above and get inversion of this 1 minute and then tap back into this 1 minute, and I would probably try to add into a full position right here. Right? So as we come back in and inverse and retest the inverse, another add would be good right here, right? So let's say you're doing a pyramid entry. Let's say, for example, you have a 10 micro full lot. Let's say your first entry is 5 micros, half a lot. So you're in 5 micros here. You're waiting for us to inverse this 1 minute. Once we trade back in, let's say you add in 3 more micros, right? So your entry is not going to move up too much because you are pyramid entrying. So let's say you get your 3 micros. So now your entry moves up just a tad bit, right? Let's just say your entry moves up a little bit. I don't know exactly where it would move up to, but let's just say here, for example. Okay, let's say you wanted to add 2 more micros off another retest of this inverse. Maybe price comes back up, comes back down again. Maybe you wait for inversion of this fair value gap right here, like this one. Boom. And look, you could have added again. Let's say we inverse and then we came all the way back down here. You could have added 2 more micros right there, and that would have barely moved your stop or your entry up, maybe a few ticks, and you could have added into a full from there, right? And you're still looking for 143 ticks, and you could have started to de-risk a little bit as this moves going up, and you can start trailing your stop loss. You can move your stop loss closer and closer. You could put it just around this low, right? Because we have already tested and rebalanced the equilibrium of this fair value gap. We've already shown it's strong. So we already see a strong bounce. You can start to move your stop loss up. So now you don't have a lot of risk, maybe 45 ticks, and you're still looking to catch 143 ticks for a first TP. Da Vinci, does that make sense? Like, that's like an example of pyramid entries where you want to add into your position when your trade is doing good. And you want to add in, you don't want to go in, let's say 4 micros and then add into 6 more micros, because that's going to cause your entry to move way too much. You want to add in more at the start, right? And then add in a little bit as the trade is going. Now, for me, sometimes what I like to do is go half and half. So what I would maybe do on this trade is, my full position is 6 minis. So I would go in 3 minis here. And then once we start to pump and once we get that inversion and come back, maybe I would add 3 minis right here. So then my entry still wouldn't be too bad. It would still be right around this level. That's kind of something I like to do as well. But again, don't add into more positions than you started with, because that is going to cause your entry to move way too much. I like to either pyramid entry or do half and half. So that's one example of, you want to wait for your confirmations. As you start to get more and more confirmations on your move, that's when you can really start to scale in more to your trade. What you don't want to do is have this trade come against you and then start trying to DCA, dollar cost average, unless you're a professional at dollar cost averaging, which most prop firms don't even want you to do anyways. But let's just say I don't like adding into losing trades, right? I like to cut losing trades when they're not moving in my direction. I like adding into winning trades. So you want to add into your winners once you see more confirmation in the move, and then you want to cut losers when you see that the move is not going in your direction, right? So that's an example of that. All right, Pablo. See you tomorrow, man. See you tomorrow. Let's see. I'm reading through some of your chats. Yeah, a lot of people are saying if Trump wins, the market's going to be very bullish, and they're saying vice versa for Harris. Again, a lot of it is speculation, and yeah, you just want to look at historical data. Historical data is going to tell you everything. Yeah, I would believe that. But again, I like to read the market technically. If I can combine my fundamental analysis with technical, if my assumption is that the market is going to pump if Trump wins, then I just need to read the technical analysis. And if that starts to happen, then I'll just read off the charts and be like, okay, so if I think that the market's going to be bullish when Trump gets elected, or if he gets elected, then I'm going to start looking for longs, but I need to see price action aligning with that. And if it is aligning with that, perfect. And vice versa. If I think, let's just say, for example, if I think the market's going to tank if Trump wins, same thing. I'm going to look for bearish bias. And if the market is aligning with that, I'll start looking for shorts, So I think it's just aligning your technical and your fundamental analysis together. Too many people focus just on one, where they're only trading fundamentally with no technical, or they're only trading technical with no fundamental. I think it's good to have a balance. Voice crack. I think it's good to have a balance between the two. Now it just depends what your strong suit is. If you are stronger when it comes to fundamental analysis, you can read through a company's financial statement and know exactly what's going to happen with the stock. Cool, do that, right? Focus on that. But if you're someone that is way stronger when it comes to technical analysis, focus most of your time on the charts, and then just use fundamental analysis as just a little bit of extra, just so you have an understanding of what might affect the market. Now, me, I'm more of a technical guy. I love technical analysis. I feel very confident in my technical analysis, but I still pay attention to fundamental stuff like news that comes out and how that's going to affect us, how earnings comes out and how that's going to affect the market, because it's still very important. But at the end of the day, my technical analysis is my strong suit. That's one of my edges in the market. So I'm gonna play into that edge instead of trying to focus all my time on fundamentals if that's not really my strong suit. So does that make sense, guys? You got to focus on what your strong suit is. If your strong suit is technical, play into that. Be a technical trader and use some fundamental analysis to help you out. If your strong suit is being fundamental, play into that and look for your trades based on fundamental analysis, and then use technical analysis to help you out. Right? That's the way I see it. You're more technical and barely use fundamentals, but still pay attention to things that can drive volatility in the market. Exactly. That's exactly how I am, right? Exactly. And some people might be the opposite. And as long as you understand what you are and what your strong suit is and what your edge is, that's all that matters. That's truly all that matters. But I think it's very important. I don't think you should neglect what news is coming out, what earnings are coming out, because it has a direct effect on the market, right? We'd be dumb to say that a red folder news event has no effect on our market, because it does, right? So we want to have an understanding of, okay, if our news or a jobs report comes out really negative, we're going to look for the market to dump, right? If we have really bad Tesla earnings, we're probably going to see the market dump. Things like that are pretty basic ideas, but it's still really important to pay attention to. Very important. I agree. All right, guys, what else you got for me? Any other questions? Any other questions you got for me? Comments, questions? Man, this election for me is like, I don't know, it seems like exciting. Whereas like, I know there's a lot on the line for this election, but it almost seems like it's more exciting than the 2020 election. Whereas like everybody said the 2020 election is the most important election ever, but now people are saying the same thing for this one. I don't know. It just feels like there's some excitement around this one a little bit. It's like a little bit of fear, but a little bit of excitement. Like what is going to happen? Because I truly don't know who's going to win. It's just 50-50 on news and stuff because you can have a bad NFP market. Yeah, no, I agree. I agree, right? You have your assumption. You would have your assumption for what would happen, and sometimes the exact opposite happens, and, you know, that's just the market. That's just trading, but I do agree with that. It can be very 50-50. As long as you know it's going to bring volatility, right? That's really what matters. As long as you know that there's going to be high volatility from that news, that's what matters. And crypto, yeah, I've been seeing that a lot. It's so funny. I'll be on social media and like, it doesn't matter when it is. It could have been a year ago. It could be now. People are always saying you need to buy crypto now. You need to buy crypto now. I'm like, you've been saying that for the past 4 years. Why is it, you know, people, I think a lot of people don't really have any, people don't even know when they should be buying crypto. I am more of a, I would say hold on. I'm more of a, you know, if you're doing long-term investing, I like to just hold on to my investments because again, like I don't day trade crypto. I don't buy in, buy out of crypto. I'm more of just a long-term holder when it comes to long-term stocks. That's what I like to do because if you see all these videos, there's so many conflicting videos of like, you need to get rid of all your crypto. You need to hold on to all your crypto. It's like, I don't know, man. I don't know. Everybody's always like, we're in a bull run right now for crypto. And then other people are like, no, we're not in a bull run. I'm like, just read the charts, you know, and make that decision on your own. But I'm all for myself. I like just to hold. I like to hold. And when it's time to get out, it's time to get out. Take the profits, right? I like taking my profits, but still holding on a little bit. Got to find a good cryptos with utility at a low price and wait for the bull run to... Yeah. And there's a lot of them out there. You can trade the news if there's clear manipulation before or during it. I've tested some news trades off technicals and hit some big ones just off technicals. No, yeah. There is opportunity to trade news for sure. I always recommend just for anybody that's beginning or hasn't done it before to stay very far away from it because of, you know, the volatility. It's smarter not to do it. But if you have back tested, let's say NFP, let's say you've traded NFP for like a year or two and you've back tested and you've found that the strategy works, you know, I'm not against that, right? But what most people do is they will come in and they will gamble the news and just hope they're going to make a bunch of money and basically flip a coin and say, I'm going to gamble that it's going to be bullish, you know, and then they end up getting absolutely destroyed, right? Maybe they get lucky every once in a while. But I agree with you. Like, I think it's best to stay out of it. But if you have a good tested strategy for trading news, that's different. If you know your risk management, you know that I'm not completely against that idea. Okay, guys. Well, is there anything else you'd like me to go over? Any other questions you have? Any other questions you guys got for me? Yep, exactly. I've seen people where they'll hedge their bet or they'll hedge their trade and they'll go long and short and then they get stopped out of both of the positions and just get absolutely wrecked. Like, yeah, because you didn't account for the 500 ticks of volatility or 300 ticks of volatility that came with the news. Like, not a very smart thing to do. All right, guys. Well, that's what I got for you today. Just wanted to run a little quick education. I know we ran a lot of education this morning during the FFN stream. But today is all about education for me, right? All about just learning, teaching you guys and going over important concepts. No trading today, right? I've already gone over that. Just education. And again, if you guys are struggling with your education, my challenge to you is to start now. Start learning right now as much as you can. Start watching videos. Start taking notes. Start testing it in your charts without trading it. Use the replay tool, right? Use this replay tool up here on TradingView. Take advantage of it. Utilize it. It will help you so much. What I like to do is watch a video. If I'm learning a new concept, I will watch a video. I will take notes on it, and I will pause the video every time there's something important that I think I can see in the charts. And then I'll go over to the charts and I'll chart out that level. And then I'll go back to the video. I'll take more notes, and then I'll go back to the charts. And I'll flip back and forth until I have such a good understanding of that concept. All right, I don't move on until I know what that concept is, until I can see it in the charts clearly. So don't just learn one thing here, one thing there. Learn a strategy or a concept until you have a very good understanding of it. That way you can start to see it in real time. Once you've learned that concept, move on to the next one, right? But don't try to flip-flop and, back and forth between this and that, because I know for me at least that was very hard to do, because I tried to do that and I wouldn't fully understand one concept, and then I would move on to the next one, and I never really learned the other one. So I really recommend spending time learning. Like, if you want to learn unicorn models, go watch my video or go watch a video on YouTube and learn the unicorn model until you can chart it out 100 times consistently and you can see it in the market in real time. Once you can do that, then you move on to the next strategy that you want to learn, the next concept. That's the way I think is the best way to learn in trading, at least for me. I know some of you might learn differently than me, but for me, that's what worked. And it still works to this day. With anything that I'm learning, that's what I like to do. But okay, guys, that's what I got today. Thanks for joining up. Good little educational session. That'll be it today. I probably will not be trading tonight. I think it's going to be, I don't think I'm going to trade the entire day. I'm going to wait for tomorrow and see if we're going to have good price action tomorrow. I will not be trading Asia session tonight. I will just be keeping up to date with the election results and working on videos. I'm working on a lot of education for you guys as well. A lot of videos and some cool other things that we're going to bring to the Discord. Hopefully one thing tomorrow that we'll announce for you. But yeah, God bless all of you. Have a great rest of your day. Enjoy yourselves. Get some learning. Get some learning in. Do what you need to do. Get yourself prepared for tomorrow. And I will talk to you guys all tomorrow morning. Peace out, my friends. Peace out.